Good evening. This is the Elliott wave update for the Nasdaq 100 and the S&P 500 for Tuesday, December 20th, 2022. I'm going to start right here on the hourly chart. There's nothing to be updating to the larger picture, which would take us to the daily chart. So I'm just going to review what took place today and actually what took place overnight as well. And what we likely are going to see either overnight into tomorrow or just overnight with another scenario presenting itself tomorrow. Once again, the market played out a little bit differently than what I was expecting. As I left it last night, I had placed the bottom of wave one here, and I believe, yeah, and then this would have been part of ultimately the minor wave two, but that did not come through. In fact, we started with some pretty strong about 10 o'clock Eastern, 7 o'clock out here on the P coast. We got hit pretty hard, and that was due to the actions taken by the Bank of Japan. And that just kind of drove a lot of things down pretty far. But we rallied back out of that. So what I can do now, looking at the hourly chart, we have 1, 2, 3, 4. Those are the minutes. We're still within that minor wave one. But then we get a 1, 2, 3, 4, 5. Do it again. 1, 2, 3, 4, 5. A nice clean 5 for that minute fifth, minor 1. So coming back up here to the top, 1, ABC 2. And then it subdivides. Subminute 1 of minute 3. Wave subminute 2 of minute 3. Subminute 3. Subminute 4. Subminute 5. Minute wave 3. Minute wave 4. And then we get the 5. So all the form fits. 3 waves, 3 waves, 3 waves. And now we're into a minor second wave. And what we have are the Fibonacci's. But what we have noticed all along is that the pullbacks or the bounces have come in very, very light in terms of the distance that they try, the power that would be behind it. And I'm giving all the credit to the fact that what the market is now believing, and in fact, as we enter into year end, instead of seeing a renewal or a continuation of a trend that had been going on for too many years, in fact, a Christmas rally, an end of year rally, as fund managers and other traders start to prepare for that year end, whether it's like getting ready for taxes and et cetera, et cetera. So there's a lot of things that can take place. But what's seeming to happen now is that we're seeing it come in little bits and pieces and not very strong. So that end of year work that needs to be done is shifting out of a lot of stock. And right now it appears that that is being really contained and hitting the Nasdaq. So it's in a lot of the larger tech companies, we're seeing adjustments being made. And that, of course, is Apple, Applied Materials, AMD, Amazon, Google, Metaverse, Microsoft, Netflix, NVIDIA, etc., Tesla. Tesla being carrying the crown today for getting hit the hardest and traded and closed below 140 today, closing at 137.80. So we are seeing the correction happen. We are seeing prices come down. So we continue to look at the move as part of an intermediate third wave down. Within it, I'm going to say we did complete minor wave 1, and we're in that minor 2. Again, not as strong as we would think, but still decent rally. So what I believe we may have gone through here is an A wave. So A, B, C, and 3-wave, A wave. And now we're in that B wave, but look, it appears to be forming a triangle. So B waves can do that. Again, small, but so let's just kind of open this up a little bit. Let's take a peek at the 30-minute chart, see what we look like. So here again, A, and then an A, B, C, D, E, maybe. So, and if that's the case, even if A, B, C, C, A, B, C, D, A, B, C, E, so we might have a little bit more, but you can see that it's getting smaller, it's wedging. So it could be the B wave. And the resolution would be releasing the market again, but in the form of a C wave up. And that C wave will be 5 waves in and of itself. So within this B wave, we do have the A, B, C, D, E, and that is where all of the waves are 3 waves. First of all, because it's a triangle. Second of all, because it's a B wave. But mostly because of the triangle. So we count that as A, B, C, D, E, and all of them form 3 waves inside of all of this move. Now, that being the case, I'm still going to look for a little bit of that upside rally. And I'm thinking that we should be able to get above 11,349. But right now, at the moment, market seems to have trouble keeping above and holding above 11,1200. We got up to almost 11,1250 this morning, and then immediately nosedive off of that over 100 points, and then rallied back to it, but couldn't hold it, rallied back up to it again and couldn't hold it, again couldn't hold it, et cetera, et cetera, et cetera, until we finally start wedging into the end of this triangle, and then a boost. Now, I could give some very slight, we can put some fibs on here, but I don't necessarily have that E wave. And even if I use the very bottom, all right, I'll give it a try in terms of a thoughtful idea of where this wave could go. A, B. We're looking for C wave. And we got the A wave, right? A, B, C. No, that can't be right. I'm going to remove that, because so the B wave, we're still in it. So it's got to kind of be here to here, right? Because this is A, B, C in and of itself, right? A, B, C for A. Now we get the triangle. So let's try that again. We have that lined up. And I'm going to go to here, and I wanted to bring it over here just so that it's touching that line, basically. So a thrust out the width of the triangle. And that would be 11,100 to 11,240. So about 150 points would be that thrust. And if we're down here, and 150, and we get up to 12,000, it'll be 350. So that brings us up to that 0.236. So once again, we're just kind of working it out. And again, just keep in mind, I'm counting it as if the low of this triangle is here at 11,168. So we're up into these levels, which would make a nice ABC, and we'd be able to put a minor 2 on that. So now you can see how I'm coming up with it. We already have this level as a retracement level for this minor wave 2. And that would be bare bones. So it's 0.236. Above it, we do have the 30-minute 200, which is at 11,383. Let me go back out to that hourly chart. And it's going to look pretty much the same. What we have up above is we have the hourly 50 at 11,267. That would come up first. We have continued at 12,009 to 11,294, 11,315, 327, and then the 236, which is 11,345. And then top side, we have 11,375. And that would all work. That all could fit. But we're running against a clock. And that clock is called tomorrow's numbers. And tomorrow, pre-market, actually, these all come out after the market opens. So we have consumer confidence at 10 a.m. and existing home sales at 10 a.m. Eastern. So we open at 9:30, and by 10 o'clock, we might get direction. So there might be buyers first off in the morning, and then we'll just see how that all works out. It may come during the night. And if we already get up there, then the numbers might have something louder to speak about. Who knows? But I don't think consumer confidence is going to be tipping the top end of a scale. So now we have what we could do in a minor two. Let's take a look and realize that what we're actually confronting here is the completion of a minor two. And that would be pretty short considering this was last night and this would be maybe tonight. So for a minor wave, but that might be what we get. And the reason behind that is there is purpose to the selling. You've heard me speak before. It's like, if it's really going to go in a particular direction and that direction is down, then the sellers are selling with purpose. And right now that purpose is to rotate out of something into something else, position squaring ahead of year end. So that's a purpose. They have a reason to be in and do business. So a lot of times you'll see that because it's slanted to the downside, there's more reason to be sellers than it is to be buyers while we get these type of moves. And the bounces still happen, but they don't necessarily have stronger purpose. So a lot of this is going to be tied around the options and how these options trade, and also in the indexes everywhere. Because when you're trading options, you're hedging, and that's usually the underlying. And then we can also, pick up what the bigger firms are doing. So a lot of things go into what makes up these prices, let's say, or these levels. So for tomorrow, got the numbers coming out at 10 a.m. I'm looking for a completion point for this minor wave 2. Once we get up there, we've worked out to where we think, or just a clean move up to 11,150, 11,350, excuse me, would be good. And then, of course, we still have that ability, if the market takes these numbers and runs with them, or there's a particular scenario that's going to push the market higher as the buyers come in, I don't know, then I would think we could get up to next level, which is 11,538. We have the hourly 200s. It's just below at 11,521. So we have resistance again. We're pretty much looking like we're in a triangle here. The resolution is, excuse me, that we get an E wave completing and a thrust upward to complete the C wave of this minor wave 2 ABC structure. All right. Our moving averages are kind of holding tight. You can see right here that the 8 and the 4 just basically hugged the moves today, pretty much right in the middle, almost like it was the point of control. And then we had the 20 come down and just go flat right about 10 o'clock this morning. We had our moves, we had one quick down, came back, and then it just stayed at the midpoint for the balance of the session. All right, let's move over to the S&P and take a look there. And same type of deal, except this still is showing downside targets for that larger intermediate wave 3. I'm going to remove those for right now. What we have, 1, 2, same deal, 1, 2, 3, 4, 5 of 3. minute 3, minute 4, 1, 2, 3, 4, 5. Nice and clean here in the S&P. Very nice and clean. So I like it. Larger than I would have had expected, but not out of bounds, so to speak. Very acceptable pattern and coming down. Then we have the start of that same deal. Let me open that up because looking at it like that, and I even got a large screen, we miss a lot. So I'm going to go down to my 30-minute chart. We're going to open that up again. And we're going to see same deal. Wedging nicely. I think it's the same. We'll go down and finish the E wave and then thrust up and out of that triangle. Back over to the hourly chart and let me put in some let me put in some fibs that are going to work. First, let me get that chart back. There we go. So we're going to go from here. Yep. Come on. All right, the drawing. Up to here. Down to where I'm thinking the bottom's going to come in, and it was right. We use that same low in the Nasdaq, so we'll keep it the same as here. Now, good old thrust up and out. We do have resistance centered around the hourly 50, and that's going to be 38.68 to 38.70. And that's kind of kept it all day. We had a couple of points where they were going to look like they were going to go make a attempt at it, that one being the closest, and failed. So it came within 3, tried it again, they all failed. So I would suspect that if indeed this is a wedge and it's a triangle pattern, that once that E wave is complete, will thrust up and out and likely come above this 38.68 and then 38.70 as we start to head up in 5 waves. And right now, the width of that triangle here, 38.03, it's about 60 points. So if we go 60 onto that, we're looking at 39.09, which we have. Now that would be pretty powerful from here for the S&P, and the Nasdaq would then be expected to be going up to its higher levels. Now, one more time, I want to put in, let me remove that. That's for that C wave. Let's take a look at what we have in terms of just this wave, minor wave 2. And in that case, I got to include, we're just going to do retracements now, but they're going to be for that entire wave. And you're going to see that it's not really, again, same deal, minimum 38.92. And that fits very, very cleanly to this thrust up and out. If we have it up at 3900, that would be perfect. And then we have that as initial resistance, and then a break above, we have additional resistance at 39.35 via the 200, the hourly 200, and then 39.50, which is 382, which is not unusual for a second wave. So we still got to hold that we have this potential to kind of do a little pop. And it would be considered a Santa rally. I'm telling you all, I already saw something out here as I came on to do it from CNBC. There still might be a Santa Claus rally yet. It's like, can't they come up with something new to kind of talk about? But that might be what it could be, because it's how people interpret that. Oh, we're going to run. It's like, no. That whole Santa rally is, I think it's something it's like I've been talking about. It's like, yeah, we might have 1 or 2 days of upside. And that's it. And then it's going to revert and it's going to go. You're seeing it even in today. We get a nice run up and boy, they come in and smack it. Boy, they come in and smack it. And so it's just like, and like they did yesterday. We don't know what the reason is. Elliott's never going to tell you that it's like, well, here, this is the reason that this wave's going to happen. Or we're going to get this downwind or an upwind. But you'll find it in the pattern. And so, yep, we can still count it down. We got it. And it was Japan loosening, lowering versus the rest of the world raising rates. So, Japan, our savior. Anyway, back to the S&P. I'm kind of looking that that's what it's going to do. I think we finish up here. Again, the fact that it can't get itself up into here is kind of a signal to us of what the overall tone is. Again, as we have seen them come in the sellers, they are coming in with purpose. And again, not to reiterate, not to double up what I've already said, if we're really looking at the fact that there's a lot of position squaring, and maybe that entails that a fund manager is selling, or several fund managers are selling, or portfolio managers are selling out of tech and moving that into something else, may even be within tech. So everybody does their homework, everybody works out where the portfolio adjustment is going to be, and now they've got 2 weeks to do it. So I think we'll see both sides. The last couple of days, last week, we have seen the sell side. Now maybe we see a couple of day or two of the buy side. Don't know. All right, I am going to finish it up there. Here are our resistance levels going up. We also added a resistance level for the anticipated, if indeed it turns into, but we are still looking for a C wave up. If this is indeed a triangle, we should thrust up and out of it and head up towards this area. All right, that's going to be it for today. Again, remember tomorrow morning, 10 a.m. consumer confidence, and we also have existing home sales also at 10 a.m. I expect nothing too great about existing home sales. If it comes out with a major upside surprise, I would say that it's a typo. Anyway, next update will be on Wednesday, December the 21st.